Welcome to our new video series, A Beginner's Guide for Brands. What is embedded finance? In this video series, powered by Finastra, we speak to a series of experts to take a closer look at banking as a service, the scale of the opportunities provided by embedded finance, where it's already having an impact, partnerships, and actual use cases. So it's episode 3 in our video series powered by Finastra, A Beginner's Guide for Brands, What is Embedded Finance? Today I'm joined by Jonathan McPhail, Lead Client Partner, Banking as a Service at Finastra, so very well placed to speak to these things. And we're going to be talking about embedded cross-border payments. So, Jonathan, let's start with just an overall view of, obviously you're focusing on particular business challenges. What are some of the challenges that businesses face when operating internationally? And crucially, what impact has technology and innovation had on addressing those challenges in recent years?
I think the main challenges that business have with operating internationally is just the very simple fact, we don't need to really go past it, is that they're paying out of currency. So they're making, instead of operating only in their own currency and domestically, which these days is quite straightforward, or used to very fast, very real-time payment capabilities that either our banks or our fintechs we use as individuals or as businesses provide. That's just not available as often with international payments. It brings about an additional complexity, an additional cost. And if you look at businesses that operate internationally, they'll generally have a longer time to get paid when they have customers that are abroad and are paying them in other currencies, and they'll have a higher cost to get paid as well. So it means that you get paid as a business, you get paid slower if you're receiving funds, or if you're making payments, it's going to cost you more to pay your suppliers. And so it seems quite straightforward, but these are relatively large challenges for businesses that will impact them if they try and operate internationally. However, we do see that the technology in terms of platform providers, so be they finance platforms or treasury platforms, or whoever these companies are that are offering businesses digital services and digital ways of operating, they're starting to bridge the gap and provide them with tax advice or with ways of accessing payment service providers.
Great. So we're starting to see a little bit of innovation come into this space to address some of those challenges that you just outlined. But when it comes to embedded finance in particular, how does that provide an opportunity to build on that and deliver a better payments experience or an easier payments experience?
Yeah, that's a great question. I think it follows on directly that as the way that companies operate becomes more digital, and there are providers, again, who are providing them with tax advice or ways of accessing buyers in different countries, or even e-commerce platforms if they're selling on marketplaces. As those places they operate become digital, they then become the perfect places to embed financial services, including payments. And so if you're selling across border on an e-commerce platform, for example, you're going to get paid in multiple currencies, which means you have to be able to operate in multiple currencies. Or similarly, if you're importing goods to then sell, you're going to have to pay your suppliers in different currencies. But if all of these interactions start to happen on a digital platform, then you'll have a much easier way of initiating the cross-border payments either to your suppliers or ways of receiving different currencies from your buyers. So it's really the digitalization of the business and their processes and how they operate that's providing those places in which we'll actually embed financial services, specifically cross-border payments.
So, and it sounds like in addition to easing the access to those products and putting them in the context where they're needed, are you also broadening the access to them? So is it more open? We think of kind of big multinationals, but would that also broaden access for SMEs, for example?
Yeah, absolutely. And I think that's where we see the biggest change is SMEs are taking on these digital platforms to manage their business and facilitate broadening of the countries that they sell to. But I think the key, though, to remember is that it's not just the SMEs and digital platforms that need to advance to facilitate cross-border payments. It's also the banks and the way that they connect and the way that they embed their services, but also the way that banks fulfill those requirements as well. And we've seen that there have been a lot of correspondent banks that have drawn out of the market and no longer want to offer as broader range of currencies. It's very expensive to offer some of the different currencies and corridors that they may have in the past. And so this is another area where we at Finastra have seen different providers come into the market to take up the gap left by correspondent banks, but also provide better services than may have been available in the past with that SWIFT-based correspondent business.
So that's really interesting when you mention that banks are withdrawing from some of these spaces, creating additional gaps to adding to what may have existed previously.
Yeah.
What are some of the other benefits of embedding cross-border payments? And can you give us some examples?
Sure. I think the key to consider is that in the past, if payment wasn't embedded, you're doing something relatively manual outside of your process. But if you start to get this all into the business platforms that you operate in, you can start to look further ahead. So you can start to plan your currency needs ahead of time. You can start to look at maybe covering some exposure you have coming up in 2 months' time or 3 months' time, rather than just looking 2 or 3 days ahead of time. So the more that we have the cross-border payments and liquidity embedded in the business platforms that companies use to manage their business, the more they'll be able to access risk services that provide additional products from financial institutions to cover those risks. So again, simple things in FX like forwards and swaps, as opposed to just using payment services.
So you've given some great examples of the value to different stakeholders of embedding cross-border payments. But what's the size of this market? Can you give us a sense of that?
I think the cross-border payment market globally is enormous. If you look at all the use cases together, it comes up to about $165 trillion worth of value a year. Obviously, if you break that down, the largest segment by far is business to business. That's around 150 trillion. But you can look beyond that into the use cases that are really impacting the way that people interact with cross-border payments, and consider remittances, individuals paying other individuals across borders. That could be, for example, expats paying their family back at home in the currency that their home country accounts their family hold. Or if you look at business to consumer, that's a lot around payroll, international payroll, or international pension payouts from governments, or dividends if you have funds invested in another country. And you put all these different use cases together, and as I said, it does add up to an enormous amount. But going through the correspondent network has meant that these payments are slow and relatively expensive. Embedding these cross-border payments and using alternative rails as opposed to SWIFT, including the last mile settlement, is going to provide a lot of value to this market.
That's absolutely fascinating, and yes, that is a very big number. So thank you for sharing your thoughts on that and really giving us a sense of the scale of the opportunity. Thank you, Jonathan.
Thank you very much.